What's up YouTube, Silver Dragons here. In this video, we're going to talk about some sketchy stuff that is going on in the gold and silver markets. Now, JPMorgan has been caught manipulating the price down. They've been fined massive amounts of money. This is proven in a court of law, and we thought it was all over. Well, they're back at it again. Stay tuned because this is absolutely ridiculous.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
Thank you so much for watching my video. I do sincerely appreciate it. To kick things off, I just wanted to show the news on inflation. So U.S. inflation climbs to a new 41-year high of 9.1%. CPI shows as gas prices surge. So we're breaking new records for inflation, but precious metals prices are still relatively low. And there's a lot of stuff going on. I don't think manipulation is the only reason they're so low, but let's check out this article here. This is going to blow your mind. JPMorgan traders are in hot water for manipulating the gold market. This article just recently came out. I know JPMorgan has got in trouble before, specifically for spoofing in the silver market. So let's dive into this, and I might go on a little bit of a rant because this kind of stuff just makes me furious. I mean, this is criminal activity, and you would think that either they would stop because, you know, the punishment is worse than the crime, but as it turns out, the punishment is not worse than the crime. They're not being fined nearly enough money. I mean, when it's all said and done, they probably end up still making money after all of this illegal activity. No one's being thrown in jail, so they're just going to keep on doing this forever until we get tougher and make worse punishments, or I don't know. I mean, something's going to have to happen, but let's dive in here. So this article starts off, jurors were told that JPMorgan has been ripping off the gold and silver markets for years. Lucy Jennings, a prosecutor with the Justice Department's fraud section, said, "This case is about a criminal conspiracy inside one of Wall Street's largest banks," adding, "to make money for themselves, they decided to cheat." So let's just stop here for a second. This bank is already loaded. I mean, they're one of the biggest banks in the country, one of the biggest banks in the world, and they don't have enough money, right? It's never enough, right? I mean, this is so messed up because when they cheat, when they're actually, you know, spoofing in these markets, who's losing out, right? There's someone on the other end who's losing so that the bank can win. So they're screwing over other investors, other institutions. I mean, they are forcing gold and silver prices lower. So I guess from a stacking standpoint, if right now you're just in accumulation mode and you don't really care about the price, you just want to get as many ounces as you possibly can, then maybe you're happy about this. But I mean, I don't know. This is illegal and it's wrong. It's not a free market. It's a rigged market. So, okay, continuing on, 3 former JPMorgan employees are in the firing line, including veteran head of precious metals Michael Nowak, gold trader Greg Smith, and Jeffrey Ruffo. I guess he ruffoed some feathers. An executive director who specialized in hedge fund sales. They are all charged with racketeering, conspiracy, as well as conspiring to commit price manipulation, wire fraud, commodities fraud, and spoofing from 2008 to 2016. So this part here talks about spoofing. It says spoofing was banned by law in 2010. It involves vast orders that traders cancel before they can be executed in a bid to push prices in the direction they want to make their actual trades profitable. So you lie and you say like, hey, look at all these orders. There's a lot of people selling, or there's a lot of people buying, and you can force the price up or down so that you can cheat and make money, right? Okay, Smith, a lead gold trader, was said to have executed 38,000 layering sequences over the years, or about 20 a day, prosecutors said in filings. Nowak himself primarily traded options, but he would dip into the futures market to hedge those positions. He tried his hand at layering in September 2009, according to filings, and went on to use that technique some 3,600 times. So that's pretty sketchy, but let's read this part and then you'll see how sketchy this actually goes. So Rufo is alleged to have told Smith where he needed the market in order to fulfill orders involving at least two of his hedge fund clients, More Capital Management and Tudor Investment Corporation, according to court filings. So this guy Rufo, remember, he is the executive director who specializes in hedge fund sales. He just needs gold to come down just a smidge, just a little bit, to make it enticing for these hedge fund clients. You know, hey, let's hook them up. Let's get them a good deal on the price of gold. We have the technology. We have the influence. We can bring gold down to help these guys out, right? So he talks to Smith, the lead gold trader, and Smith is like, yeah, no problem. No problem. I'll do what I do best. I can force that price down, hook you guys up. It's so sketchy. It's so criminal. It just blows my mind that they would do this. I mean, think about it. The price for gold, or the spot price, is determined by the futures market, right? It's a paper market that determines the price for a physical precious metal. So if they're manipulating this price, I mean, this affects everyone. I mean, this is craziness. This is not the only high-profile case in recent times. Two former precious metals traders at Bank of America's Merrill Lynch were found guilty of spoofing by a jury in Chicago last year. So this is last year, 2021. People over at Bank of America doing the same thing. In 2020, more traders were convicted. In September 2019, JPMorgan admitted wrongdoing and agreed to pay more than $920 million to resolve U.S. claims of market manipulation in both precious metals and treasuries. So this fine right here, $920 million. I mean, to you and me, that seems like a lot of money, but to a big bank, I mean, this is nothing. This is not even a slap on the wrist. And honestly, I don't think they ended up paying anywhere close to that amount. Right? I think it was much less that they ended up paying for the fine. So if they can make money and the fines are, you know, pretty much nothing to them, they're going to keep doing this. They're going to keep doing this probably forever until something changes. I mean, and why are they not getting in more trouble? Like, I'm pretty sure if you get caught for spoofing and all this kind of stuff, you're supposed to go to jail, right? I mean, shouldn't you go to jail for committing these insane crimes? You know, especially if you're doing it for years and years and years, and obviously this is just part of your day-to-day. It's not like, oh, whoops, I accidentally placed an order. I was going to go through with the order, but I had to cancel it for whatever reason, so I didn't realize it was a one-time thing. No, I mean, look at this. 38,000 layering sequences? Come on, that's not a one-time thing. And then this other guy, 3,600 times. This is obviously a pattern. It's probably going to continue. Honestly, it's probably going to continue forever until the punishment is worse than the crime. Because right now, the punishment is certainly not as bad as the crime. And the last thing I want to say on manipulation, if you look over on the bottom left of your screen, you can see the paper to silver ratio. This is currently 395 to 1. So that's how many times paper silver is being traded compared to the actual ounce of silver in existence. It's almost 400 to 1. And remember, the paper markets determine the spot price. So this in itself is manipulation when there's so much crazy trading going on for every 1 ounce of silver. If all these people said, okay, I actually want the ounce of silver, of 400 people, one dude is going to get it, right? There's not nearly enough silver to cover all these paper trades. And then you go to gold, paper to gold ratio, 113 to 1. Not as much as silver, but still, this is crazy. There's not nearly enough gold to cover all the paper trades. And when the spot price is determined by the futures market and paper trading, something is wrong here. So we know there's manipulation going on in the precious metals markets, and it's not slowing down. It's not stopping. There's lots of instances of these spoofing and, the layering sequences, all that kind of stuff, which is illegal, and it's still going on. So in conclusion, I want to finish off by saying that, yes, I honestly think that there are very rich, powerful people who are rigging and manipulating the gold and silver markets for their own profit, for their own gain, and they're forcing the prices lower. So what I'm going to do to combat that is I'm going to say, okay, if you want to force the price lower, no problem. I'm just going to buy more. I'm going to buy more silver. I'm going to buy more gold, and I'm going to take advantage of these prices. For whatever reason, if the price is lower, I can buy more of it, right? So eventually, I do believe the manipulation will end. There will be an end to this at some point, and the people who are holding the physical precious metals at that point, they will be the big winners. And so I don't know if that's going to be me. Maybe it'll be my kids when I pass it all down to them. Maybe it'll be my grandkids. I don't know, but I'm going to stack as much as I can in the meantime. Anyway, what do you think of all this manipulation? Feel free to leave a comment down below in the comment section. I do want to say a massive thank you so much for watching, and I'll see you all in my next one. Silver Dragons out.